What's going on, guys? We're gonna go over this breakdown very quickly here. I don't want to keep you guys too long, and I want to make sure that we get into this trade at a good price. I did go over the analysis a couple times. I know I sent you guys a message saying this video is processing, but I did have a couple things I wanted to add into this breakdown because I saw a couple areas that I missed. So we do have a nice bearish run, but as we all know, for those of us that are experienced traders, that once we have a down channel, we're gonna have a side channel and then an up channel, traditionally speaking. Now on the 2 hour, we also have this huge area of support and resistance. This is a high demand zone. The market must come down to this level several times before it can continue in its designated direction. In this case, we have an area of support. Market was snapped twice. First time with an immediate reversal back above, confirming that the market at that point could not continue down below this level. We did have the second snap, but there was an immediate reaction to 149.20 before the market moved back above. So what we are currently expecting is the market to continue the bullish trend and to snap this lower level to fill in that unhealthy price action. Unhealthy price action being any zone in between here, because there are no wicks filling in these empty spaces of bearish trend. Now jumping into the 30-minute, I want to go a little bit more in depth into the current analysis. We have a nice area of consolidation, two key levels, one in blue, one in purple, that I want to cover. The one in blue is a very temporary level. Now this level is our lowest level of support when it comes to potential drawdown on our order. This little imaginary temporary area of support actually stems from the 5-minute with consistent consolidation and consistent touches to that zone. If we do happen to get into drawdown, I do expect this level to react for two reasons. The first reason being that temporary area of support. The second reason being inside the golden area of the 50 and the 618. Now, if we go on to a little bit of a higher time frame, run the fib from the lowest point of the initial bullish push to the peak, we are going to see that the Fibonacci levels are heavily respected. We have an area right here along the 64, area just below the 50, the point 50. This area actually falls in line with the current bullish trend because once it tapped into the golden ratio, we had a nice bullish run for about 15 pips. If I can estimate correctly, I am completely off. 42 pips, excuse me. Still getting used to guessing pips on a higher time frame. Now the second zone right here, this bullish run, if we run the Fibonacci from the bottom once again to the top, we are going to see that we have nice, beautiful respect being inside this zone and inside this zone. These two areas were completely respected from the 618 and the 764 lower golden zones. When you have market respect the zones perfectly, that not only clarifies that you've ran the fib correctly, but it means that you've had perfect touches and you're getting in at a prime entry. If we were to enter off of the 50 and the 618 from a lower time zone when the market opened, we would already be running 26 pips in profit with very minimal drawdown. Would have been a beautiful entry, but of course we don't trade that early in the market. Therefore, we are going to look for a potential reversal from the current position. So anyways, jumping into the actual breakdown of our potential positions, we have two outcomes. One which is already kind of running, but I haven't entered just because I don't trust the false bullish energy. So again, as you all know, we have nice areas where the market has already played out. Third area being here before we have a nice potential breakout. Now, because we're on the 15-minute, I do see current bullish trend along with our Fibonacci. Our two entries would come along the current price, which is 149.77. This comes from a nice break above of current market structure. I am expecting a retest to the zone. I am actively watching this chart on the 5-minute, seeing how the market structure builds out, which we are currently filling out nicely. I want to get into pushes where we have consistent price action and the market has consistently respected the zone before actually executing the trade, because again, we don't want to get in on false pressure. We want to get in when the market is actually taking off. Now, our second position would come along this area right here. Now, the reason for that is because if you go back on the 1 hour, that is the highest peak where the market has played out just yet. Let me actually get rid of that and drag this over, which actually falls in line with the 0%, but we're not paying attention to that. The 0% would be our second entry. We would have the market fill out anywhere inside this empty price action. And now the reason I'm again waiting is because this area still needs to be filled. If it doesn't get filled and we see bullish pushes above the 149.87, then we will execute a position at price action or current market price, CMP, and we would have our stop loss somewhere in the 15 pip range. Again, we haven't had the market fill out just yet, but 15 pips would be ideal for the actual position itself. Now, as for the take profit zone and why I've placed it that far, well, you can see here, we have area where that needs to be filled. This is considered imbalance and unhealthy price action, and this area has yet to be touched with a bullish run. Healthy price action means the market pushes down, market comes up to fill in that empty zone and continue the actual trend. So we have a lot of area to be filled. Overall price could be an astounding 326, but we don't plan on holding the trade for that long because we like to close our positions before the end of the night. That's going to wrap up this quick breakdown. I hope you guys enjoyed. Hope this trade makes sense to you guys. If you have any questions, pop them down in the link below. But keep a watch out for the actual market's execution. I'll talk to you guys later.